Well, hello, Maverick traders. Welcome out to your market roundup for April 12th, 2022. Corey here with you. As always, just a quick reminder to make sure you follow your trading plan. Let's take a look at markets and market internals. So, kind of an interesting day. I think it felt worse than it really was just because you started the day up and then you finished the day down. So, it kind of felt like we fell a lot. But in reality, we were just mostly flat on the day. The Russell continues to outperform, just slightly higher. Oil caught a big bid, up 6.5%, and gold up 1%. So the inflation numbers out this morning are causing people and Wall Street banks to basically say, are we at peak inflation? And so I've seen some different projections, and kind of the thesis is that we're kind of at a point where if you look at a graph of inflation, it's kind of been rising upward, right? And we're hitting 8.5. And the question is now are we going to start that descent where we kind of come back towards more of a 6, a 5, a 4, and so on? At some point, you have to be at the peak, assuming that we're going to head back down, assuming that we're not heading towards 9, 10, 11, 12. And I think that's likely that we're somewhere close to peak. I mean, core CPI actually backed up. So excluding energy, which has been very inflationary, you're actually seeing some pricing starting to fall back, some slowdown in inflation. That doesn't mean that there's not still too high of inflation, because if we go from 8.5 and we are at peak inflation, if we go back to 6, well, that's still 3 times the Fed's goals, right? They have a goal of 2% inflation. So at 6%, that's way too high for them. They're coming in, and there's certainly going to be a lot of interest rate hikes, and it's going to be something we're going to have to deal with. Now, if inflation were to back off more rapidly, you got to kind of think through this process of, okay, where does the market go from here? I think we are kind of towards the peak levels, and we are going to back up later this year. You're going to see us back to 6 and 5%. But having said that, that doesn't mean that the markets rocket higher. This is really ugly price action for the markets. Let's take a little bit closer look at some of those charts. So if we come into the S&P chart, looking at this, you have mixed signals. So the 20s sloping up, the 50s kind of sideways, and they had a bullish cross. But that bullish cross, well, it's kind of met with a declining price action that's now below those moving averages. So you're not bullish, but you're sort of not bearish. Where do we go from here? You had been in this downtrend, and we had broken that downtrend line, but I suspect that this is the type of market environment that's just going to be frustrating for the short term. And by frustrating, I mean as you start to decline and you see kind of ugliness. Like, imagine tomorrow we have a really big down day. After having been down for so many days, almost in a row, the last couple of weeks, I'm watching for some sort of capitulation, exhaustion type of move to kind of expect, okay, that would be where we might bounce. And on the flip side, if you kind of start to bounce and they're normal size candles, but then after you've gone up for 3, 4, 5 days, if you get a bigger size bullish candle, my guess is that that would be kind of the top, and then you'd go back. You're not going to perfectly flatline, but my best guesstimate on the markets is, look, we just aren't sure where we're going to go. So we're just going to kind of stay range bound for a while. And this mix of moving averages, when we talk about, well, what's an indicator of sideways price action? Well, how about just all the moving averages bunched together and going relatively sideways? That's usually when you start just crisscrossing them and they don't hold a lot of significance. You can almost kind of ignore them to a certain extent, just in terms of, don't make too much of a touch of the moving average, a move through the moving average, because you're probably going to see more of that. I mean, just as quick as we've kind of come through the 50, my guess is we'll get a bounce here that probably goes back up above, and then we'll probably see another push below and so on. So I don't know that those breaks, they're not the type of breaks that are kind of game changers like this one, where the trend really reversed hard and then the moving averages crossed and it was just away we go. I think here you're going to see a mixed bag. QQQ, there's not really much to add. It's a little bit weaker than broader markets. So NASDAQ and tech stocks underperforming some other sectors, specifically, materials, um, energy, of course, and then even some of the other sectors that you might not expect to be outperforming, like healthcare or what have you, are also doing pretty well. I've liked the healthcare space, like we've highlighted Johnson and Johnson and some of those names, which have done pretty well. I don't so much love some of the defensive areas going forward. I'm not sure that I would be chasing those stocks higher. It's going to be a little bit of a tricky market to trade here in the short term. So as you look at the heat map with energy, with oil prices up sharply today, energy bounced back. But other than that, I mean, it's really kind of a mixed bag. You're seeing a little more red in financials, certainly red right here in a segment of the healthcare space today. My overall outlook, I mean, I just don't have a strong opinion. I'd have to kind of grade this market out at a 0 and say I don't want to be super, super bullish or mega bearish either. If you had to pick one, you'd probably go bearish. We came from a downtrend. This looks like kind of a deeper correction that might be rolling over and that we might have a little bit more downward price action than upward. I can get behind that. I mean, if you want to go -1 or something, but it's not just a clear picture for me right here, right now. If we're going to make a run, certainly seems like it would be more likely to be down than up, but expect some choppiness here in the short term. All right, let's look at some potential ideas here. So a few names on the bull list. T-Mobile, Verizon, you could even add AT&T. Some of those telecoms look pretty good. I would kind of look at them as a newer area. I've highlighted T-Mobile for a few weeks in a row, but Verizon and AT&T very much starting to come back for the first time in a long time. Twitter, I've got more of a neutral, and then on the bearish side, you'll notice some stocks here: Home Depot, Lowe's, Uber, some of these high growth names that I would expect to continue to underperform. We've had them in the list for some time. So KHC, just an upward trend, an upward trending stock. This is in the consumer space, and anything that is related to consumer products, foods and drinks, they've really taken off to the upside. I had Coca-Cola dead wrong. I had highlighted that as a bearish idea a month or so ago. We talked about it up against its 50-day moving average, and if it rolled over, could be a really good short. If it breaks up and through it, well, then you can't bet against it. And it broke up and through it, and it's been on just a rocket ship to the upside. KHC, very similar. You had a deep pullback here, but ultimately right back up and now at new highs. You might see a little check back, but looks like it wants to trade higher. Target, kind of again in that same vein of something that has broken out recently and just high basing. Relative strength to the market, to most stocks, to most sectors, all those types of things that we're looking for. Again, this one might not really trade up a lot, but it certainly looks better as a bullish to sideways candidate than most ideas out there. And T-Mobile, one of my favorites here that we've highlighted for the past while, just, here was where we first highlighted it, was down at this lower end of the range, and it was hitting the lower Bollinger Band above its 50-day moving average, etc. That was the first entry. Then you kind of had this cup and handle. There's a second entry on this little pullback. You could have even bought on the breakout, but anyway you slice it, if you've been trading this to the upside the past few weeks, it has been money. Twitter has a lot of news circulating over Elon Musk. Big position, big stake. Will he join the board? Will he not? Huge volatility spike and a lot of nervousness about what comes next. And that means the options get really inflated, really, really expensive. And now you've got somewhat of a trading range that you'll probably stay in for the foreseeable future between about 40 And I'd even call it, kind of up here in the low 50s. I suspect the next couple of weeks we may come down and temporarily go to there or temporarily go up there. Fast forward a few weeks, and my guess is we'll still be in this 45-ish general area. So we're not going to stay perfectly at 45, but even if you move away, you'll probably come back towards that. On the bearish side, this might be a little long in the tooth in that it's already been selling off for some time, but I just love this price pattern. Not, completely different than what we had back here before a breakdown. Here you got a little inverse cup and handle, and I love shorting inside the handle. This is just a nice risk to reward. Get short here. You don't have to risk too much. If it trades up to there, it's, probably a deal breaker, but it should pierce that low. And as it surges just below that on the big break, you can take profits. This doesn't have to be a multi-month trade or anything like that. I see it as a short term. We go down and we pierce below 300 and down into the 280s or so, and that's where you're looking to take profits on that spike lower. Lowe's has already broken down, a little bit of relative weakness, but similar to what we were looking at in Home Depot, it already kind of played out. You had the retest of support, the bounce, so you have the inverse cup and handle. It broke down, and now you're getting the check back up. Again, I would suspect pierces down here in the 190s, and you could take profits on that spike lower. Uber is going to be a little bit more, call it sideways to lower. This one I would like to continue to play, but you might get a little bit of a bounce first. I mean, I'd really love it if it bounced weekly for just 2 more days, kind of up into that moving average, and then start to roll over. If I could get short in that 33.50-ish range, that would kind of be what I'd be looking at here, kind of where this gapped down to should act as resistance. We shouldn't really trade above 34 again. So if we can get it short, 32.50, 33, 33.50, somewhere, a little bit higher, I think, but ultimately should come back down here towards those lows where one could be looking to take profits. The US dollar is rallying and gold is rallying. What do we make of that? That's, kind of counterintuitive. You'd usually expect those things to move opposite to each other. We've highlighted some gold stocks, silver, different things. I've actually got a position in silver, which didn't start well, but now I'm back to profitable in that position. But precious metals just look good. Commodities continue to outperform. We've got retail sales on Thursday, and earnings season kicks off this week. Big week for earnings in the financial space. Citigroup, Goldman Sachs, JP Morgan, Morgan Stanley, PNC Financial, Wells Fargo. You've got a couple others mixed in there, United Health, Delta reporting this week. And then next week, we get into more of tech and the other sectors represented. Within the next couple of weeks, we'll see all of those big large cap techs, the Amazon, Apples, Googles of the world. So we're heading right into earnings season. Financials are basically at their lows going into earnings. The market's kind of positioning for those earnings to be bad. It's going to be hit or miss. I'm guessing some of those financials are going to go lower still, and some of them it's not going to be as bad as expected. So it'll be, kind of picking and choosing if you wanted to trade that. I don't have any position earnings related on any of them yet, but might dip my toe if I see an opportunity. So hope you enjoyed this market roundup. Have a great rest of your week, and we will see you next time. Goodbye, everyone.